Yeah, that 70 has come down to 55. So just the last 5 or 6 minutes, there's been some profit taking from the highest point of the day. Today's been interesting because the open and high almost the same. And now you're seeing a bit of a decline from the high point. This is Closing Bell. I'm Anuj and with me is Surabhi. Hi Surabhi, good afternoon.
Good afternoon, Anuj. I'm watching out for one stock quite carefully, ICICI Bank, because I think today the first half was pretty good because some of the big boys like SBI and ICICI participated. But now as we're looking at the cool off, this is the one stock. In fact, as we speak, it's at the flat line, almost on the verge of turning negative. Let's see how this plays out. But otherwise, how do you sum things up? And do we run the risk of repeating yesterday, given that this is the last hour?
Things don't necessarily repeat the same ferocity. Look, the point is, now it sounds better with hindsight, but yesterday when the market was completely collapsing and, taking support somewhere on 10,600, perhaps that was a time to sort of try a buy trade. I think who has made money today is someone who bought yesterday's, late decline. Today, it's really all over the place. The problem with the market is that, because we are in a bear market, gap ups normally get sold into. Today we haven't got sold into, at least that much credit I give. And once again, the mid caps are outperforming, advanced decline for the last 2-3 days. Some of the stocks are making a bit of a comeback. I think stocks like Exide. I think what we are now going through is a completely different stage, the accumulation stage. We went through distribution where the index was outperforming so much and individual stocks were falling so much. We had a bear market in mid caps. I think what's now happening is some of those haloed stocks are falling. I mean, now look at Jubilant Foodwork. That's down quite a bit. TCS, I think second or third day running has contributed on the way down. ITC is down. Lever is down. So Reliance, of course, is still holding up. But what we're seeing now is Surabhi, where that mean reversion perhaps might be happening, where the mid-cap divergence had gone up so much that needed to correct.
Some catch-up is happening.
Having said that, I think that since the introduction of the weekly options on the Nifty as well, even the Nifty trade has sort of, you need to adjust a bit. Today, for example, if you see the puts data, through the day the puts were accumulated, and there was just this last 5 minutes back, there was one green bar which sort of doubled the put premiums. So that's what's happening with the introduction of the weekly options. The markets become very volatile, and especially on Wednesdays and Thursdays, it is going to remain volatile on the Nifty, like it was with the Bank Nifty as well.
Okay, well, that's new product, and that's what we're getting used to. Though the one aspect of trade that stands out, while broader markets are obviously relatively holding out better, do watch out for certain pockets. Of course, the entire ADAG pack, for instance, which is under pressure once again. I mean, Anuj, first of all, I don't know who would be punting in these stocks, or if there was any so-called investor who would still want to be investing. So I don't know who's really active on some of these names now. But given what's come out of the court today, what would the view be here?
Stocks can do anything, Surabhi. Relcom is anyway now a 5 rupee stock. How much will you flog a dead horse? But look, this judgment of Supreme Court tells you just one thing: Supreme Court is supreme. That is why it's Supreme Court. At the end of the day, you have to respect that. And if Supreme Court has said you pay 550 crore, you pay 550 crores. You can't get away from that.
450.
Whatever it is. If it's 450 crore and 20 lakh, you pay 450 crore and 20 lakh.
That's true.
Simple as that. And stock is anyone's guess, but this is obviously one area where people have lost a lot of money. On the short side, you made a lot of money on these stocks. I think this is trader's delight on the short side, the ADAG pack. But that's all I would say, honestly. Okay. And in one way, it's a from a lot of people believe that this is something like this perhaps was needed.
Okay, well, that's been the one big headline of the day. Let's get started. Here's what's lined up on Closing Bell. The market has been holding on to gains, though it is off the highest point. Infosys and Reliance are driving the Nifty higher, with stocks like ITC and HUL being the key drags. NASSCOM has held back its FY20 guidance, citing business uncertainty. There's interesting divergence between TCS and Infosys. Infosys doing much better. What does all of this mean for tech stocks? We'll be discussing that and several other trends with the fundamental experts, SP Tulsian of sptulsian.com, market expert Amrish Baliga, and Sudeep Bandopadhyay of IndiTrade Capital. All of them weigh in. Now, with the market seemingly snapping its 8th session losing streak finally, is this a good time to be hunting around for mid-caps? How should you look at portfolio creation? What are the views as we get into election season? Sandeep Shah of Motilal Oswal Private Wealth Management joins in. And of course, as always, lots of trading ideas coming your way with Ashwini Gujaral and Mitesh Thakkar.
Okay, the market's turning volatile once again, trying to make a move back towards, I mean, not the highest point, but there's some bit of buying which is again happening. So 10,671 is what you have on the Nifty right now. How should you position yourself for this last hour? We have Ashwani and Mitesh now joining us. Good afternoon. Ashwani, been in green through the day, though of the highest point of the day right now. How are you reading the situation right now, and what would be your stock calls?
See, it's a weak rally. I mean, after 10-15 days of downside, if we can't construct a 100+ point rally, it is weak. And if you see the daily chart of the Nifty, from 10,600 last time, we had had a 550 point rally, basically on the upside. This time we are not able to gain even 100 points, and that way, in case 10,600 goes out decisively, then possibly the market will get further downsides, and that may happen tomorrow, day after, because it appears that there is selling around 10,700, 720, and for a couple of days, both days we have failed. So my sense is that there shouldn't be any harm trying to take short positions through options even at current levels, because this 680, 700 is not getting taken out, and my sense is that March, at least the first 15 days, most of the time is a negative month. So that way, the rally seems to be petering out. Having said that, individual stocks, Canfin Home is a buy with a stop of 247, target of 260. RBL is a buy with a stop of 548, target of 562. And Tata Steel is a buy with a stop of 484, target of 510.
Ashwani, since you feel the rally is petering out, are you carrying short positions on the index for the last hour?
Yes, on the index we have short positions, but they'll have to be carried. It does not look like today itself the Nifty is likely to collapse, but more and more it's clear that the 10,600 support or the base out there, the buying isn't enough to move up much further from here.
Okay, all right, let's bring in Mitesh into the conversation as well. Good afternoon, Mitesh. What's your take on today's rather range-bound action? What are you doing, index or otherwise stocks?
Yeah, so good afternoon. My belief is that I think eventually we'll head much lower, but I think we are now showing signs of tiredness, at least on the declining side on the intraday indicators. Though there's choppiness, though we haven't got a very strong reversal as yet, but I think the downward force has kind of stalled for the moment, and my belief is that we might just chop around between 10,600, 620 on the lower side to roughly about 10,700, 750 on the upside, and that market might remain for about 3-4 days before we eventually start breaking down again. For the time being, the calls which I have are a buy on REC with a stop at 124 for targets of 131, and a buy on Shriram Transport Finance with a stop at 1,033 for targets of 1,077.
Okay, that's a lot of stock calls. We have SP Tulsian of sptulsian.com and Amrish Baliga now joining us in our studios. Good afternoon. Ms. Tulsian, let's first discuss two stocks of the day which quietly moved up so much. I'm talking about Minda Industries and Harita Seatings. Minda is now up 12%. What do you think has led to this kind of move on the stock? And obviously this would mean for something like a Harita Seating, there is that arbitrage.
Anuj, first coming on Minda Industries, I don't know the specific reason for moving up by about 12-13%. But yes, you are right. If you connect this with the arbitrage opportunity which you see in Harita, you need to understand the background that Minda have agreed to acquire the Harita Seating company, which is into the seating system, having about 10, 11, 12 plants, plus they have 51% joint venture in a German company, and that was seen to be EPS accretive. If I'm not going into the background of the company takeover and all that, just to summarize or to make it very simple, 152 shares of Minda Industries will be issued for every 100 shares held in Harita Seating. And now if you take a call on the working of the Harita Seating, which is at present a TVS Group company, eventually being taken over by the Minda Industries, is seen to be EPS accretive. I'm first going on the earnings, because if you see the dilution in the equity is happening to the extent of about 6%, while the EPS may get increased by about 9%. So that means it is EPS accretive by about 50%. 6% dilution in the equity is happening, but the bottom line will increase by 9%. That's number one. Number two, Minda Industries itself is seen to be an excellent company amongst the auto ancillary space. The share company has in fact issued 200% bonus about 6, 7, 8 months back, and since then it has been ruling subdued, because generally which we see that after such a bonus issue you see the old shares getting sold, bonus shares are retained. So probably that it must be coming out of that congestion zone now for Minda Industries on a standalone basis, because I don't find any reason for the stocks to correct, because their working for 3 quarters have seemed to be good. Now if you take a call on the acquisition of the Harita sitting, probably on the enterprise value basis or maybe the replacement cost basis is giving a lot of advantage. I have first given you the earning, that even on an earning method it is seen EPS accretive by about 9%, while the equity dilution is 6%, but 12-13 plant and 51% is equity investments in a polyurethane foam company, German company, is seen to be very valuable and very rich. I'm not taking a valuation call on that, whether it runs into 700 crore, 600 crore, 800 crore, maybe almost 50% of the price at which they've agreed to acquire. So overall it is seen positive for Minda Industries, but still if you really take a call and if you want to have the positional view on Minda Industries for maybe next 1 year or so, which we hold as a positive view, then one can acquire the Harita sitting, because the whole process of merger may take about 6 to 8 months, and just work out the ratio of 1.52. That means you have to multiply the Minda share price by 1.52 to get the effective valuation of Harita sitting, and if it is ruling lower, that is the arbitrage opportunity seen to be existing when you buy Harita sitting.
Okay, so that is the big merger and how the arbitrage is playing out between those two stocks. We also have Amrish Baliga with us on the show this afternoon. Amrish, thoughts on this interesting stock? It's rallying up as we speak. Kaveri Seeds. Now, it's been a great wealth destroyer last couple of months. Absolutely. As well, and then we have all of these new issues in Andhra Pradesh. Would you at all look at being a contrarian here?
No, not really. I mean, especially when there were corporate governance issues, and then you've seen the sort of results this company has been churning out. I think this sort of a bounce back, in case it continues for a while longer, I think should be utilized by those who are holding for a while, couldn't exit earlier. I think they should utilize that to exit, because I think this is just a short-term sort of a bounce back.
Okay, just a short-term kind of bounce back is what you have on Kaveri Seeds. Just looking at some more names, KPIT Tech, by the way, perhaps now is settling into the fair zone. It listed at 140, then of course slipped all the way down to 90. 110 we believe is the fair value for that stock. So somewhere around that on the stock right now. Ms. Tilson, your thoughts on the ADAG? I mean, of course, you've always been negative on the stocks, but from here on, is there any point even looking at these stocks?
See, Anuj, actually, as you have rightly said, that we have been keeping the negative stance on this stock, going forward. And I think in the morning also I've said that probably it is better to shift to other mid-cap IT stocks, maybe like Tata Elxsi or Hexaware or maybe L&T Infotech, Mindtree, or maybe Tech Mahindra. In fact, when you have the number of opportunities available, I don't think that there is any point in remaining invested in KPIT Tech.